Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are finding yourself on this channel for the first time, every single day at 1 p.m. UK time, we drop an update just like this one to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. You know, we do try and synthesize all markets together and work out where our small but very significant cryptocurrency market is potentially heading. So that's exactly what we're going to be doing in this video. We are going to be starting the video off by getting straight into a clip from the European Blockchain Convention of an individual giving his opinion on where we are as an industry, and that we're at this inflection point that the next bit of our journey sees institutional adoption come into it. Now, we know there's a little bit of correlating things going on with what this individual is saying in regards to ETFs. First, of course, a Bitcoin spot ETF, which seems very likely to be approved now that they've got CZ, and uncontrollable character that they can't, they don't control, essentially out the way. And Binance, it's very likely, in my opinion, that they are going to be allowing an ETF now that he's out the way. One thing that Gensler would continue to reiterate is that one reason he hasn't approved an ETF is because he thinks Bitcoin is manipulated. The objective is to not have CZ, someone they don't control, manipulate it, but someone they do, like Larry Fink from BlackRock, so on and so forth. So we're going to be starting the video off there. Then we're going to be diving into a number of things, a little bit of macro-y stuff in regards to liquidity. We know that quantitative tightening is still happening. However, when you look at a number of things like liquid and credit facilities, they continue to increase. When you look at things like the Treasury dumping new bonds, there's multiple forms of liquidity, stimulus in many different areas that are still finding their way into the economy. This is one reason, actually, why Larry Fink, to bring him up again, said that there's not going to be a landing until potentially 2025, which matches up with our kind of laggard theory on rates. And when the shit hits the fan, then we'll be looking at another $1 billion printed by Tether. Then talking about CZ himself, as he has been ordered essentially to stay in the United States. They've classified him as a flight risk. He seems to be getting a lot harsher treatment than the likes of Sam Bankman-Fried. And I'd say Sam Bankman-Fried did significantly worse, although they are looking to go after him over a number of different things, alleging that he's done Sam Bankman-Fried or FTX style things. So we've got a lot to get into, as always. Let's kick the video off with this clip from the European Blockchain Convention.
Into the crypto space, which led to a lot of devaluations we saw then. A lot of the dump that happened the last 2 years was the opposite. So interest rates were going up, and money and liquidity was withdrawn from the market. Paired that with all the problems and issues that happen inside of crypto, and then changes in regulation, a few other things. I think we're now at an inflection point where this is about to shift. We have a lot of the in-house problems being washed out and taken care of, or being removed and resolved. We have a clearer picture on regulation everywhere except the US, I'd say. And that's given a lot of confidence and clarity and trust and security to investors, as well as VASPs and those offering services. And finally, even the quantitative tightening seems to come to an end. I don't think we see quantitative easing very soon, but at least the tightening is coming to an end. So this is a perfect scenario for fresh money to enter the space, and specifically institutional money entering the space. And that brings us back to the ETF. Right.
Yeah, we absolutely agree. Very much on our thinking. I think we were just very early on calling a new kind of market. We were really assessing and still assess that the crypto spring is here. We are going to go into a full-blown summer, and it is going to be a spectacular one into a likely crash. It's very interesting, everything that's going on right now, and how kind of all roads are leading to the same destination. Crypto, Bitcoin right now, just having a bit of a rest, along with traditional markets. Dollar, finding a little bit of support, weighing down on the markets, the risk markets that ran into a little bit of resistance. But this will pass. Don't be too greedy. Don't expect too much. The downside is always smaller in an uptrend, which we assess this is across the board, than in a downtrend. The downside is the primary trend. Upside is primary, in my opinion, now with the market that we are currently in. So to talk about liquidity, he mentioned QE is kind of happening, and QT, it is sort of coming to an end. Well, despite the whole of what has been QT, if you look at a number of different things, and we can actually, I believe we've got a chart of sort of bank liquidity across the board here, and you can see just how tethered this is to the markets. Despite it being QT, despite them talking a very tough game, they've still had to come out and stimulate. And the reason being is because the system itself cannot handle, it can't go cold turkey. That addict, which is the US economy, would die under that circumstances. Everything would shut down worse than March 2020 if they decided not to come in and stimulate things. So assets, liquidity and credit facilities, loans, bank term funding programs, net week average. And you can see, really this year, okay, they've been doing QT, but look at what essentially has been going on with the sort of lending. And you've also got this from another point of view, which is the US emergency funding facilities continuing to uptick. You know, we did have news of, I think it was Zero Hedge reported that there was quite a few banks that were actually filing for bankruptcy recently or emergency measures. You know, there is real pressure on banks because all banks are stuffed with bonds. The bond market is a real issue. Can they allow it to continue to fall down? They're kind of hoping it gets a bid maybe due to recessionary fears, but that doesn't come till later. Is there going to be some sort of a fallout from then until now? So even though QT is a thing, it's not as black and white as you think if you take everything into account. We have more printing from Tether. So USDT, they would have likely done this on Tron. You can see, you know, they've done this kind of 2 days in or consecutively in a very short period. This is our own kind of stimulus. You know, if you look at USDT, let's do market cap and compare this with the crypto space. We're going to take this off log, not Bitcoin. You know, you can see the ebbs and flows here and how correlated they are. In the same way that traditional markets are correlated with money, the US M1 or the Fed's balance sheet you could look at, there are correlations and things that we are going to be watching more and more with the crypto space. And you can see this really upticking, the market doing a similar thing. And this is all converging around dollar weakness, which we've looked at, and everything in between. A little bit of news, perhaps an update on CZ. This is from CNBC. So he's making all the big headlines. Binance founder Xiaopeng Zhao ordered by judge to stay in the United States ahead of a prison sentence. So I believe they even gave Sam Bankman-Fried bail, who, you know, didn't comply, didn't do any. CZ, who's somebody who's actively handed himself in, he could have probably laid low in UAE. They're penalising a lot more than the likes of Sam Bankman-Fried, who, what happened there was, what happened with FTX is very different to Binance and complete and utter fraud and theft. Whereas Binance, really, if, as a user, as somebody that's used Binance, they've never done anything to me but, you know, facilitate what I wanted. And I think that's the same for many people out there. So a federal judge on Monday ordered Binance ex-CEO Xiaopeng Zhao to remain in the US at least temporarily after his guilty plea last week. The US government is seeking to prevent Zhao from returning to the United Arab Emirates before his sentence. The judge in Seattle said Zhao has to stay in the US while the court resolve the government's motion for review. So they are treating him, you know, I really like CZ. I feel very sorry for him. I think the only thing that he's perhaps been guilty of is unknowingly being, or being naive and unknowingly. I don't think he intentionally broke any laws necessarily, or he might have naively done it and been caught for it. But I don't think he's purposely funded terrorists. I don't think he's purposely, you know, done anything of an FTX kind of scale or that warrants the same kind of scrutiny of him as the likes of Sam Bankman-Fried. I think CZ is genuinely, and I still believe this, a good actor in the crypto space, and I wish him all the success in his trial, but he's getting a real harsh treatment. I suppose they've got to make a straw man out of somebody. Take a look at a Bitcoin chart. Remember, we did say that Bitcoin it had earned a rest, and it had really ran into the first bit of volume that it's seen in an awful long time. We're really going to be diving into the technical analysis. We had a technical analysis from the start of the year and a technical guide that Bitcoin has very much followed, and we do expect it to continue. You know, we still have targets in the 40K range, which I think will be met. You've ran into your first little bit of volume. You sliced through the sort of 30 to 35K range just as expected, and you've really just ran into resistance, and it should absolutely be treated as exactly that, in the same way that it should have been at the 30K level. This will push higher. Whether it needs a deeper correction to do so is still to be seen. Our others dominance is still setting up quite nicely. It looks like we might get a bit more of that pronounced right shoulder, and this is going to be full-blown alt season, ladies and gentlemen. Right now, we are deep in AI. This idea of decentralized computing and decentralized AI in the world that we're moving towards, they're going to be titans and potentially the big companies of tomorrow. So we are situating ourselves in there. We will be covering it into 2024. Patreons are already getting a lot of those updates and positioning. But generally, the market is doing exactly as we anticipated. It's been a very good year for us. Stock market, again, the correlation there, ran into resistance, taking a bit of a break, really significant resistance as well. You can see just how significant this resistance is. Ultimately, we've got higher targets for the stock market. NASDAQ was one of our absolute golden trades. Straight into target, pull back, straight into target again, also running into resistance. So markets have just got this bit of resistance along with gold that they need to get through. At the same time, the dollar is slightly finding its feet. We do think the dollar's in a longer term trajectory to the downside. On the topic of the dollar, today I do believe you are getting US GDP for the last quarter. Now, this is going to be exceptionally interesting. My overall thesis is that the economy, and we've had this thesis, is going to do well until it doesn't, okay? Until rates and everything catch up. And that's if the rates get, they don't do something drastic and bring rates down. So there is still this, Powell's sitting very comfy right now. Inflation is brought down. There's been no major catastrophes, so on and so forth. The dollar's doing okay. It's higher than it was sort of pre-2022. But I still do think a crash is coming. I think the yield curve's predicting it. We've not brought the yield curve up in a hell of a long time, so let's do that now before I love and leave you all. This yield curve, we essentially enter suicide watch when the yield curve is at point of uninversion, and it's still not there yet. So again, dollar down into 2025. This could, start to climb its way up for 2025. You've got elections that have been moved to 2024, UK and Spain, and also the US election where they're not going to allow anything to crash until that happens. There's lots of things that we're looking at that are all lining up. But that's really all I've got for you on this update, guys. If you've enjoyed this content, a like is appreciated, so is a comment. We'll keep you up to date on a daily basis. Risk markets running into resistance, dollar finding a little bit of support. This is only going to be temporary, and they're going to continue in the direction we think they're going to. That's all I've got for you in this one, guys. Thanks for watching. See you in the next.